Alright guys, this is gonna be part one. I just got absolutely whooped on Clash Royale. That's sick. Anyways, so part one, this is gonna be setting up the charts, breakout setup, what indicators you need, time frames that you're gonna look at, and yeah, just kind of reviewing the setup. So number one, before we go over anything, any indicators, anything like that, when you're looking for a setup, make sure that it doesn't say biotech. It better just not be a biotech. So biotechs are going to be healthcare, biotechnology. So if it's in this sector, just don't trade it. Don't ask why. Actually, well, I'll tell you why. Because they just gap down left and right. I don't know why they do it, but they do. Let's try to find a biotech really quick. It's just up 1,000,000%. That's not a biotech. That's not. There's a biotech. So you see how these are just like gapping. It just gaps all over the place. They're usually really small caps. They're just shit. So don't trade biotechs. All right, now that that's over, let's go. Let's see. So indicators. What indicators do you need? Well, you don't really need all that many. It's pretty simple. I just use the 10, 20, 50, and 200 simple moving average on the daily chart, which this is where I mainly look for setups. And then I have volume. That's pretty much all you need. You don't really need any indicators here on the 5 minute or the hourly or the 1 minute. I do have some, so I have the 9, 20, and 65 EMA on the hourly, which I use pretty similarly to how I use the 10, 20, 50, and 200 on here. 1 minute, I could probably delete that. I don't even use it. 5 minute, I use this for entries, so that stays on the right. Like, let's say I'm looking at a setup, starts a breakout, then I'm here looking for an entry. But we'll go over that in a different video. For now, let's go over the setup. So add these indicators: 10, 20, 50, 200, simple moving average on the daily chart. Look for setups on the daily chart. That's it. Don't look for them on the weekly, the monthly, the hour, the 5 minute, the 1 minute. The dailies are going to be the best. So just go with that. You can start to change up the time frames as you get better at this, and you should be better at this by the time that this series is ended. But for now, just keep it simple. Just go with the daily chart and pay attention to volume. So for the setup, let's go ahead and put this over there. So for the setup, I'm going to use Carvana, for example. Typically, I wouldn't trade a stock that's below the 200 SMA on the daily chart, because that just means that it's relatively weak. Once it starts to go above the 200 and the 200 starts inclining, that's a good indication that this is a strong stock. Yeah, that's pretty much, so that's how you're going to use that 200. 200 is just going to be your overall trend. If it's declining and it's below the 200, it's probably a weak stock. If it's above the 200 and the 200 is inclining, it's probably a strong stock. So that's definitely something to look for. Down here, if you've already watched some of my videos, you'll see that there's a setup right here, and I did trade this one. It was below the 200. I'll show you guys when I trade them like that. But for now, let's just go over the stronger setup right here. So there's one setup here, there's one setup here. But the bigger picture setup, right? The bigger one that we're looking at that made probably the bigger move, or like easier to trade, easier to identify, easier to spot, easier to catch, whatever, right? This is the one that you probably would have been focused on. So the stock has enough volume, right? Step one. So make sure that it has enough volume. You don't want to see a really, really thin stock. Let me try to find that really quick. So if we look at the 5 minute here, you can see these candles are pretty liquid, right? They're all forming properly. NN is probably thinner. So this is a thinner looking stock. Now this is like okay for smaller accounts, but the breakout follow through isn't going to be as good. On this one, breakout follow through is good, but let's just say avoid stocks that look like this on the 1 minute where they have like no volume for some candles. Sometimes it's okay. Like it really does depend on how small or big your account is. Like if you have a pretty small account, like you're fine. Just make sure it's got a decent amount of volume and it isn't like, if you click on the 1 minute, there aren't too many of these gaps. Like something like this would be okay for a much smaller account. For me, I'm not fucking buying that because let's say I buy like 12K shares. Like you're going to see me buy this. It's going to go up a bunch. It's just not liquid enough for me to trade. But let's go over the setup. So the setup is very, very simple. Stock has enough volume. Step one. It's a decent price. You don't want to see a stock that's like 5 cents. Like, come on, be real. And then ADR should be above 5%. There are times when I'll trade lower ADRs, like Nvidia, for example. You guys know my biggest trade. It only made an like 11% move on this breakout, 12% move in 3 days, and it only has a 3.79% ADR. So typically that's something I would avoid, but the options chain is pretty good on it, and it had good risk to reward. So what we want to see above 5% ADR, or why we want to see above 5% ADR, which stands for average daily range, is because that usually gives us a better risk to reward. But when trading options, like, that can be adjusted a little bit on some of the larger caps. I'll go over that in part like 3, maybe part 4. It really just depends. But yeah, for now, so the setup. I'm going to show you guys quite a few examples, and then I'm going to show you why I have these moving averages on, how I look at the volume, kind of how I analyze the stock. So it's really simple. It's really not that difficult. It's going to take you a little bit to get used to, but just watch this video over and over and over, and just continue to watch my videos, and you will figure it out. So stock makes a 300% move, right, in about a month. We know that that is probably good. So it's going up on high volume, and it's just like made a big move. So what happens after a big move like this? Well, the stock is going to go sideways. It's going to consolidate, and it's going to build a range. If there isn't a price range, like if it just goes sideways a little bit and then just continues back up, like whatever, ignore it. But when it builds a nice range like this, you have to pay attention to it, because you're waiting for the breakout, and this is how you're going to make a lot of money. This one you can see up, sideways, up, sideways, up, sideways. But if you look at like a bigger picture, it's just up and then sideways again. So you can kind of ignore this if you really want to. But yeah, you'll see that, let's see, make sure the webcam's not in the way. And then let's make sure, let's go, how does that look? That looks pretty good. Okay, so like I said before, 50 times, 300% move in like a month. And then after it makes that move, so it comes above the 200 SMA, typically you want to see the moving averages already in order. Like you'd want to see it setting up like this, like 10, 20, 50, 200. All of them are inclining, and they're all in order. This is kind of a setup right there, but this was day before earnings, so you're not going to trade that. I'm getting too ahead of myself. Anyways, big move up, stock goes sideways, and as it goes sideways, you want to see how it holds along the 10 and the 20 moving average. And in this case, you can see that the 10 and the 20, it holds it perfectly. So it comes back to the 10, holds the 10 for like 2 days, comes down, then almost goes to the 20, then bounces back up right above the 10 again, bounces back down to the 20, then breaks out. So if we were to just look at the setup right here, you can see that this 20 is almost drawing that bottom line for you, and it's building these higher lows. So that's really important. You want to see these higher lows being built, because if the stock is like, if you get, a setup like this, where it's just channeling down or something like that, that's not as good as if it's coming to a pinch like this, where it's building higher lows and lower highs. So that is going to be the better setup. And it just means that this is getting bought up. So like institutions, funds, banks, or whatever the fuck you want to call it. Like, who cares who's buying it? All you have to know is people are just buying this up, and it's not going lower. So it's likely to continue higher. Now what we have, big move up, goes sideways, and then as it's going sideways, you're going to notice that this volume starts to decline. So over the days, the volume is just getting lower and lower and lower, and the stock is getting tighter and tighter and tighter. So it's tightening up, and then it builds these higher lows. Then you typically will see a few of these narrow or, thin candles right before a breakout. So you'll see a candle like this, even this one's decent. And then, next day ended up being breakout day. Typically before a breakout, what you'll see is a negative, so a red candle, like a red day, or a thin candle. But realistically, all you're looking for is you want to see this, and then you want to see the price go like that. So you want to see the price build this flag looking thing, right? And then you want to see it come to a pinch. And the tighter it gets, the better. That's a little strange sounding, but anyways, if we look at Nvidia, so Nvidia, market leader at the time, a leader of the tech sector, and tech was a leading sector at the time. Like I said, as we get more advanced, or as we get further in this series, we'll get more advanced. But what we have here is a big move up. So for the past 6 months, I'd say, Yeah, past 6 months, this stock was really strong. It made a 200% move. It was leading the tech sector. And then it had good earnings here, so it gapped up. And when this gapped up, what happens? The price pulls back to the moving average. It pulls to the 10 right here, holds the 10, builds these higher lows. It just keeps going higher. And then it gets this, somewhat thin candles right here, breaks out. So this one, I don't think I traded this one. I don't remember. I really don't think I did. But then it made a little move up, pulled right back to the 10. And then this day it pulled to the 20. Now, what's interesting about this setup and why this was like the best setup and why I made so much money off this, I made 8,500% on options. Like, that's fucking huge. But you can see that this 20 SMA, like, this is almost drawing your bottom line for you. It's holding the 20 so good. Like, it's absolutely insane. I hope you guys see that, right? Yeah, you can see that. So it's holding the 20, like, insanely good. This 20 is basically drawing. Oh, fuck. I just like kicked my whole desk. The 20 is basically drawing this bottom line for you. And if I were to draw a line, it's like it's just overlapping on that 20. So when you hear people talking about like, oh, trend lines, like your trend line's going to be different than the next person's, like, dude, who gives a fuck? The way that you identify if this is breaking out of the trend line is you look at the volume. Now let's look at breakout day. So breakout day, volume's high. Before breakout day, this stock is, building lower highs and higher lows. It's coming to this pinch. So no matter, I could put this line down here. Doesn't matter. I can still identify what's going on here. I can still identify that this price is holding the moving averages properly. It's tightening up and the volume's dying out after it makes this big move, right? Pretty simple. Pretty simple concept. So then, boom, it breaks out, and that's when I bought it. I'll go over like entries and everything, all that later. Right now is just the basics of the setup and why we have these moving averages, how to use them, whatever. And I'll post the link to my layout. So you'll get all these scanners, you'll get the risk calculator, all these indicators will already be on. You'll have, the monthly, weekly, 1 day, and then the 1 hour, 5 minute, 1 minute, your alert console. So the layout will be the exact same as mine. I'll post the link to this. You just have to sign up for TC2000. I'll put the link to sign up too. It's like, I think it's like $40 a month. If you can't afford that, like realistically, you probably shouldn't be trading. $40 a month is like what? That's like a little over $1 a day. You could probably just stand in the street and ask for money if you really needed to. But yeah, if you can't afford TC2000, you probably shouldn't be trading. I'll just say that. You don't really need a ton of money to start. Like, you can start with a few $1,000s. You should be able to afford TC2000 if you have a few $1,000s. But yeah, like I said. Anyways, so good setup, right? Big move up, stock goes sideways. As it goes sideways, volume is declining, and then it holds these moving averages perfectly, and then it tightens up, and we get this really thin red day right before it breaks out. So that's a good example right there. Let's see, what was another one? Did Zoom have any setups? Pretty sure Zoom had a setup before. Okay, Zoom's got a setup towards the top. This was, in the COVID days. So this is obviously, right, like you guys can tell why it's important to focus on strong stocks that are leading. And not only are they leading, but they're in a leading sector. So Zoom, when this was leading at the time, why was it leading? Because everyone was using it during COVID. Like, it was just, money was flowing into this. And how do you trade this? You wait for a setup. So there's a setup right here at the top. That was probably breakout day. Might have been a little harder to identify, but you can see here that it makes this big move up. So it makes this like 115% move. At the time, the ADR was much higher than 3%. But yeah, it makes this big move up. So it makes a 125% move in about 1.4 months. Goes sideways, builds this tight range, and it makes these higher lows right along the 10 SMA. And then it has these narrow candles right before it breaks out. Volume's really low. How do you know it broke out? Well, because volume is big on breakout day. And then it ends up just continuing higher for a little bit, and it comes right back down to the 10 and the 20. And you can see it holds right there. You can see it holds the 20 for a few days before eventually going lower, which I'll tell you guys exactly when to exit these, how to exit them, how to enter, everything. But for now, like I said, this part is literally just so that you can identify the setup. There's a setup right there, breaks out right there. Sometimes they're harder to identify. Okay, here's a good setup. This was right when is this? Can this get any slower? Like realistically? Okay, this was right when Zoom started picking up. So most people probably had no idea that this was picking up. But maybe the usage of Zoom started to pick up. For some reason, people are investing into this. And what you'll see here is it makes a 30% move. So 30%, that works. That's fine. As long as it's, you know, a relatively big move up, and it goes sideways and it holds this moving average. So it held the 10 right there on the penny, like directly on the penny right there. And then breaks out. So it has this thin day. Shit. So honestly, you could have even got away with that being breakout day. But you can see that this, you know, makes a big move up, goes sideways. As it goes sideways, this volume dies out, and then the candles start to get thin, and it pulls right back to the 10. You know, next day bounces off the 10 right there on the penny, and that would be technically breakout day right there, and you would have been in it since for quite a while, actually. You would have been in it until there. But as you can see, right, you're looking for this. That's it. Stock goes up, goes sideways, builds higher lows and higher lows and lower highs. I don't know why I just like reversed that. Very, very simple concept, but sometimes it is very hard to identify. So for now, just like go through as many charts as you can, look back, try to identify those, see how they hold up on the 10 and the 20. And that's pretty much all you need to do. Like Carvana, or actually really quick. So Carvana, this was declining, right? It took an absolute turd. It was down 99%. And then out of nowhere, it got this bounce. So out of nowhere, it got this bounce, right? All the moving averages were declining. The 10 and 20 started to incline, but these were declining. You know, this is overall kind of shitty. You just have to understand like the context of the setup. But I mean, it's still kind of shitty. So then what happens? It makes a 81% move in 2 days. And then it comes up here, sets up right above the 50. So it holds the 50 pretty well, as you can see. And it does make higher lows ever so slightly. Candles start to tighten up. Then it breaks out on high volume. So up, sideways. As it goes sideways, volume dies out, breaks out, high volume. And this ends up making a, you know, fairly decent sized move from breakout. That's 166% in 6 days. I believe that got me multiple thousands of percent as well. That got me 3,700%. But I traded that, and then I was out here, took an hourly setup, and then that. Anyways, you can see setups are pretty much everywhere. It just really comes down to the context of it, you know, which ones are going to be better than others. But for now, how many times do I got to say it? Focus on the setup. Learn the setup first. There are variations to the setup. Not every time will it be one that holds the moving average. So you can see right here, there's a setup right there, which, you know, ended up breaking out here and going up a little bit, then setting up right here again. So that was the most recent one. If you guys look at this, we have a 37% move in just a few days. Candles are getting thin, you know, it pulls down to the 10, bounces off the 10, holds the 10 perfectly. Then we have this attempted breakout day. I think I may have bought it or tried to buy it this day, and then I ended up getting stopped out. But then the next day, we ended up getting this. I alerted it on Twitter for free for you guys, and this was like 600%, 700%, something like that, in just a single day. So that was a good trade right there. You can see like that's a 7-to-1 risk to reward in 1 day. That's really good. You just have to understand which setups to choose. And yeah, not all the times will they be the best looking setups that perform the best. It really is about the context of it, which is why I'm going to make that whole different like section on understanding the context of the setup and understanding where the market is at the period of, or at the time, and then understanding like sector rotation, how to find leading sectors, and then how to find leading stocks in those sectors. But Nvidia, absolutely perfect example, right? I hope you guys really, really take a look at this one because that is a beautiful looking setup. It's leading sector, leading stock in a leading sector with a beautiful setup. Can it get better than that? Not really. It really, really can't. Damn, I've been recording for 20 minutes already. Okay, let's see. What else can I go over for you guys? What are some other... Tesla has had some setups. AI... Not exactly. NN. This was a recent one I traded. So, you'll see here that this makes, a fairly decent move. This is a 75% move. Goes sideways. And then it comes down. Hits the 20. A penny away. It's a penny away from the 20, right? Pulls back right to the 20. Bounces up. Grabs the 10. Holds the 10. Keeps holding the 10. Is above the 10 for a little. Then bounces off the 20 again by the penny. And it makes these higher lows. So it just does not want to go lower. It just literally, it doesn't want to go lower a single bit. And then as it's going sideways, you can't really tell until I, zoom out. But you can see that the volume is slightly declining here. And it didn't really tighten up all that much as I would have liked it to. But breakout just had huge volume right off the rip. So I did take it. And I did make money on this. I made like a few $1,000s. Pretty simple, right? Let's see, what else can I go over? What are some other setups? I think as far as setups go, shit, I keep doing that. I think as far as setups go, that would be about it. Maybe some that are setting up recently. No, these are a little more complex. Okay, Groupon's starting to set up. So it's recently made over the past 3 months. It's made a 350% move. It's now above the 200. All moving averages are inclining and they are in order. So now I'm just really waiting for this to tighten up. The volume on it's a little weird looking. It's a little bit thin. Not the most liquid stock, so it's really not the best. But it's definitely a candidate right now. Let's see what else. What is something else that I traded? There's Carvana. I know I've traded Tesla. Mainly hourlies on that. I can't even think right now. AAOI. That was a different type of setup. AEHR. There's been some setups here. Kind of variations. Okay, INDO. That's something that we need to go over. This was actually dollar value. Probably one of my biggest trades. So this comes down to the context of it, but this is a really good setup. So you guys remember GameStop. This is about the GameStop size move. This went up 1,700% after breakout. That's why the context is extremely important. So this looks like, a kind of shit setup, honestly. But it makes a 250% move in 2 days. Then it pulls back right to the 10 and 20. Holds the 20 and it tightens up, and the volume. This is just such a thin stock. It was very illiquid. Or not very illiquid. It had some to it. But it's just a very thin stock. It's been holding up. It's been doing, fairly decent. And then it broke out on high volume. And it made these higher lows. It didn't want to go lower. Held the moving averages pretty well. And it just made these lower highs. It just came to quite the perfect pinch here. And it was in a good sector. And then it ended up going up 1,700%. So that's why context is extremely important. That might not be the best setup, but sure as hell got you some good gains, right? Can't complain about that. Let's see, what else? CTI, this recently had a good setup. So, this is in the energy sector, which right now has been, I'd say, the leader. It's been pretty good. But as you can see, it just goes straight up. So you're waiting for the stock to make the move. You're not sitting here trying to predict stocks or anything like that. Try to do that and tell me how far you get. You just react to what happens. So this goes up 100% in 1 month. Then what happens? Where does it go? What moving averages does it pull to? You can see this whole time gets extended, pulls back to the 10 a little, comes away a little bit, pulls back to the 10 perfectly, gaps up, then it's still extended, then it pulls back to the 10 right here, pulls down to the 20, holds the 20, tightens up, builds higher lows, and these candles, you know, start to get relatively thin. Not the thinnest, but volume's dying out as this price is going sideways. Next day, breaks out high volume. And then it continues up. And now it looks like it's starting to set up again almost. It's pulling to the 10. Might be the end here, but that is pretty good. I see another setup. Right here. Again, pretty big move up, like 60% in a few days. Goes sideways, holds these moving averages, the 10 and 20, and just doesn't want to go lower. Tightens up a bit, and then breaks out on high volume. So as it's going sideways, the volume is not really declining, kind of. It's not the best setup example, but you guys get the point. So stock goes up, makes, you know, a pretty big move on big volume in a short period of time. Then it goes sideways, then it pulls to the moving averages, then it tightens up, then it breaks out. And let's see, is there anything else? Yeah, I mean, realistically, the best one to study recently is going to be NVIDIA. It is a lower ADR, like I said, so ideally it's not something that I would prefer to take, but the options chain was very liquid on it, so worked out in our favor. Yeah, but like I said, you know, that bottom line is basically drawn for you by the 20. It's just perfect, and it gets really tight before breaking out. So let's see. All right, before we end this video, let's go over the checklist again. So the stock has enough volume. It makes a big move up. Then it goes sideways. And as it's going sideways, you want to see it pull to these moving averages, the 10 and 20. If not, okay, can I speak English? It can go just to the 10. That's fine. It'll take off again. Whatever, totally fine. But it can pull to the 10. It can pull to the 10 and 20, or just the 10. And then as it's going sideways, you know, this volume is declining. And then you want to see it build these higher lows and then start to tighten up. And that's pretty much it. Yeah, and then avoid biotechs, like I said at the start of this. All right, so next video is going to be like, let's see. I got this huge notes thing. Next video will probably be how to actually trade these. So now that you know like what setup to look for, it'll be how to actually trade them. So how much money to put into each trade, where to put your stop losses, how to take profits. And then after that, I'll show you guys how to like trade them with options rather than shares. And then after that, I'll show you guys how to actually find these setups. So how to use the scanners or even make your own scanner on whatever you prefer to use. And then market conditions, sector rotations, making sure that you're selecting the right setup. So even though it is a good looking setup, it could be in a bad sector, which makes the setup bad. There's, you know, different things. And then bad setups can be good if they're in the right sector. So it really just depends on a lot of things. It's all about the context. But yeah, hopefully you guys understand, you know, what a good looking setup is, and you can identify them. Maybe go type in some charts, just type in a random ticker. You can go to, I don't know, let's say AMD or Tesla and go back and look for setups. I don't really see many here. I see one. I see two. One back here. Let's look at that really quick. But yeah, just go back in your chart and go look at the setups. The more practice you have, the easier it'll be. So this makes a 45% move in a month. Pulls to the 10 and 20, holds it, and builds these higher lows. Gets really tight. See that really tight day right before it breaks out? That's perfect. Volume's declining as well. Next day, breaks out on big volume. Big, strong breakout. Closes near the high. Perfect. All right, so let's see. That was about a 30-minute video. God damn. I will see you guys in part 2. All right. All right. Part 2. So far, I didn't link my TC2000 layout yet. I'm going to do that. I'm going to link it to like every single one of these videos. But for now, it's not going to be there. So if it's not there, don't worry. It's just not there. Yeah, so this is going to be part 2, which is entry, managing risk, stop losses, taking profits, and I'll go over this risk calculator a little bit. So basically, you guys know the setup. The setup is, big move up, stock goes sideways. As it goes sideways, the volume is dying out, and then it's building these higher lows and it's holding the moving averages. So yeah, just looks good. But on breakout day, you're gonna see this, once this opens, you're looking at the 5-minute chart. So I got the 5-minute chart here on the right. We're looking at the first 5-minute candle here on breakout day. Now, you'll see that this 5-minute chart doesn't really look that good. Like, it's pretty thin. If you were to be day trading this, that wouldn't really work. But that doesn't matter because we're not day trading it. It has just enough volume. Typically, I like to see a little bit more volume than this. You can see it's kind of thin. This is what a thin stock looks like versus, let's say, SPY. You can see, the volume's really clean. Price movement's really clean. But this one works. It's a smaller cap, 563 mil market cap, 7% ADR, so fast mover. Decent candidate here. The first 5 minutes, so you're going to see this breakout. And this is what you see in the first 5 minutes right here on the right. You'll see that the volume comes in right away. So people always say, like, how do you know it's going to be a big volume day? Well, I can tell right away that the first 5-minute candle has huge volume relative to the other days. So down here, if you look at that, it's like, the volume's pretty low, pretty low. It comes in a little bit in the mornings on most stocks, but on the morning of breakout day, it's going to be huge. Like, you can see this looked like a pretty big volume candle right there compared to the rest, but then this one just makes it look little. So the volume was just huge on the first 5 minutes. And after that, so you wait 5 minutes, right? Next 5-minute candle comes in. So no matter if the first 5-minute candle closes green or red, that's where you're going to base your entry off. So you have to wait for the first 5 minutes pretty much every single time. You could do it on the 1 minute, but your success rate's not going to be as good. So I would just say wait for the 5-minute. And what you want to see here is when the first 5-minute candle highs are taken out. This is when you're buying it. So right here, this candle comes through, takes out the highs, you buy it, and your stop loss goes at the low of day. So on this risk calculator, what you'll see down here in the bottom right corner, hopefully you can see that, it'll tell me right here, stop loss low of day, and then it'll tell me the value, whatever the low of day is. It'll say how many shares to buy to risk 1%, and then the dollar amount of that position. So if you just right click on shares to buy 1% risk, you get this little menu. Mine's set at $1,000. So if I want to risk 1,000, 2,000, 3,000, whatever, I can just multiply that. So it's like, if it's telling me to buy 3,700 shares and I want to risk 2,000, then I'll buy 2 times 3,700 shares. Not 37,000 shares. Is that what I said? I don't know. Anyways, yeah, so you would just put your risk here. If you have a 100K account, it's 1,000. If you have a 10K account, it's 100. Pretty simple. Just put 1% of your account, put that as the first value, press OK, and it'll update. And then you change the dollar amount, you do the same thing. So right here where it says 1,000, you just change that to your 1% of your account, and it'll tell you right there. And then we have this ATR check, so this little green dot. What you don't want to see, so this is like really, really close. The ADR on this is 7.7%. You don't want to see it up more than 7.7% before you buy it. So if it's up, like right here, if you're buying the top of this candle, 8.6%, chances are you're too late. Like, you should be getting tighter stops than that. You don't want your stop to be further than in the average daily range. I mean, does it matter all that much? Not really. You're just going to get less size. Either way, you're going to risk 1%. The best ones you'll be in, like, let's say you get in like this, like the first 5-minute candle is only 1-2% higher. Then you get in, that'd be perfect. That'd be more ideal. Although this one was, near ADR, I did take it. Even if it's above ADR, I'll take it sometimes. But general rule, just try to avoid that. Try to get in earlier. If it's up, a lot more, like you're buying it way up here, that's probably not a good idea. But yeah, so you buy here when the first 5-minute candle's taken out. Set your stop loss at low a day. If it comes down and takes out your stop, it is what it is. You got stopped out. But then if it goes back up and takes out the highs of the day, You re-enter and then just leave it at that. If it stops you out again, don't try to trade it again. Just 2 tries. That's it, basically. So let's see. Now you know where to buy it. Oh, the formula. So if you don't have this risk calculator, you need to figure out how many shares that you're buying. So the formula for that is going to be, how do I make this bigger? 64. Can you see that? Okay, so the formula for this is going to be risk divided by entry minus stop. All right, so risk divided by entry minus stop. Your entry here is 5-minute highs. So let's say you're buying it at $5. Then you change this to 5. And your stop here is 4.62. 4.62. And you have a $10,000 account, so you're risking $100. Now you go to your phone, open up the calculator app. Hopefully, we all have a calculator app on our phone or some sort of calculator nearby. So you do 5 minus 4.62 equals 0.38. So now you do 100 divided by 0.38. And that tells you 263.15. So you're buying 263 shares, right? So that equals 263. Pretty simple, right? I mean, you're not going to want to calculate that while this candle's forming. Like you're going to be kind of in shambles there, especially if you have multiple breakouts to take when the market's good. That's why I have this risk calculator. It just tells me right there. I open up my broker, boom, type that in, and I set the stop loss with the buy order also, so I can just click the checkbox. That's why I like Webull. Okay, so that should make sense for entering and then managing your risk. Oh, all right. So if 263 shares, what does that equal? 263 shares at $5 is 5 times 263. So that equals 13.15. So you're putting in, if you have a 10K account, that's about 13% of your account. You should not be swinging more than 30% of your account. So if you get a really good entry and like your stop is really close to your entry and it says put in like, over 30% of your account, that's fine. Buy over 30% of your account. Totally fine. But before the day ends, cut it down to 30. Because if this like ended up gapping down, you'd be losing a lot more than 1% of your account. So it's just not safe. Yeah, but that way you'll have about 10% of your account into this position. And then as the days go, day 3, this goes up like 30%, or let's say from entry it goes up like 18%. So times 1.18, 1,500, excuse me, like $200, risking $100 basically. Pretty good, right? Pretty simple. All right. Now that we got that out of the way, what is next? Stop losses, went over that. Managing risk, position sizing, entry, taking profits. Okay, so for taking profits, now this can be a little bit complex. This is sometimes discretionary. If you see where I have this red line, so I had this red line before this ran into that, and I did take all of my profits right there. So you might be like, what the fuck, why? Great question. Where's day 2? Let's look at day 2. You can see it did end up going above that, but all right. So if you zoom out on the chart and you look back, and price was previously above this level, you're going to have areas like this. Can you see all this? Yeah, so this gives me 2 price targets. Price target 1 would be the bottom of this because there's multiple touches here. Price is clearly struggling here. It kind of came down and touched this almost a little bit, bounced back up. And then here it just really struggled, and you can see it there. I wouldn't really recommend you try to find your price targets like that. I mean, I post pretty much all my trades on Twitter and Discord, obviously, literally everything in there. If you want to, you can, but sometimes it might make you sell a little bit early. So I would say if you can identify a price target easily and you see an area like this, where price is just really struggling there, and you see that multiple times. So this one, like price was struggling here quite a few times, and then it struggled here again. bounced off this like quite perfectly. If you see something like that, that's a pretty good indication that, your take profit zone is good. And then you'll see price struggle along your take profit zone. So if we look here on the 5-minute, you see it came up on day 2, went right towards it, then came back down, came up again, went right back down, went up for it again. And then this is where I actually took profits. I was like, fuck, it does not want to go. When it came back down a little bit, I took profits right here. And then what is this? Day 3. Day 3, it came up right to the same level. So I was like, okay, that's solid. But then it ended up pushing through there. I was like, oh, wow, what a surprise. Really didn't expect that. But then it came down. So if you don't have a price target, like if you can't identify a price target like that, what you do is you wait 3 to 5 days in. So typically that's the strongest. You can see here 1, 2, 3, 4, 5. So day 5 would have been pretty shitty. But let's say day 3 or 4, you wait until close, or you wait a few minutes until close, or before close, I mean, and you sell a half or a third of your position. So it depends on how much it's up. If it's up a lot, then just sell a third and you'll be good. But if it's not up like a bunch, like you're not up over like 3 to 1, I guess you could say, just sell half of it right before close. So let's say day 3, you sell half right before close. It's about to close. Market's about to close, and it's at 584. You bought it at like 5. It's up a decent amount. You sell half there. Your stop loss then goes from break even, or goes from low of breakout day to break even. So that way you just took some profits, and now there's literally no way you're going to lose in this position. And then you're like, okay, where do I sell the rest? So either it's going to come back and then take out your break even stop, so wherever you bought it at, $5, or it's going to close under the 10 SMA, and that's where you take full profits. So today, it closed under the 10 SMA. Right here, you can see it closed under this purple line, which is the 10 SMA on the daily chart. That's when you sell the entire position. If we go and we take a look at Carvana. Carvana, I had my price target here. If we follow that line, you can see price struggled here, came up, tapped there. And then we go back even further. It had a little trouble during, what is that, COVID? I think so. And then even further back here, it struggled here again. So it was just like a really clear price target for me. Struggled here, bounced along there a bunch of times. Bounced here a bunch of times, came down, bounced, came down, bounced. And then, a couple times there. So I was like, okay, that's a pretty good price target, and it looks like it's already respecting that. So it came up, had good earnings, gapped up to this level, kind of went through there throughout the day, and then just took a turd, came down, did this, whatever, set up again, and then went right back to that level. So I ended up selling that position that day. Let's go back to NN. So Carvana, if you were to wait and use the 3 to 5 day rule, you would have gotten fucked. You would have lost on that position. And then if you waited until it was closed under the 10 to sell the rest, you would have been down below low of day, so you already would have got stopped out. That way, using this price target system, you are able to secure a lot of trades that maybe shouldn't be secured, or you can take profits at a good point. It's good for options too, for sure. But yeah, okay, let's see what's next. Oh, never risk more than 1%. If you're risking more than 1%, you are pretty stupid. In the beginning, you should risk like a 1/4% or half, because you're going to lose more. You're probably going to be taking like some shitty setups. You won't have a full understanding of everything. So don't try to risk a lot of money, because you don't even know what you're doing yet. Wait until you know what you're doing, and then risk 1%. If you get really good in really good market conditions, you can risk 2%. But do not jump ahead and try to risk more than 1%. Please keep it to like 0.5% if you're first starting out. 1/4% is preferred, but I know some of you guys have a lot smaller accounts. So yeah, I guess that wraps it up for part 2. Part 3 is going to be trading breakouts with options. So I'll show you guys how I pick my strike prices, expiration dates, price targets. We'll go over that again. And then how I manage my risk with options. So now you guys know how to manage your risk with shares. You know when to take profits, and you know when to sell the whole position. Next one will be with options, because options, you don't get as many setups. You're going to get more setups where you actually have to trade shares rather than options. And I'll also hopefully show you guys when to be trading options versus when to trade shares. It's going to be a little challenging because that's something I look at on my broker. Either way, though, we'll cover expiration dates, strike prices, take profit zones, all that good stuff. But yeah. All right. I will see you guys in part 3. All right. This is chapter 3. So, trading breakouts with options, strike price, expiration date, price targets, and then risk management for options, because that's going to be a lot different than risk management with shares. We're going to use 2 examples for this. So NVIDIA, we'll use this for an example because this was my biggest options trade. What else was big? Mara was big. Okay, so we use Mara, NVIDIA, and then Carvana. Carvana is going to be the more complex one. But let's just get started with NVIDIA. So why I traded options on this and why it worked so well. All right, if you open your broker, so let's open my broker. Let's go to NVIDIA, and we look at NVIDIA. We go to the options chain. So if you scroll over like to the right a little bit, you're gonna see this. I don't know, depends on what broker you're on, but you're gonna see the options volume. So the volume here on NVIDIA, you can see 1 point, or like the closest one to the money, the one that's just right out of the money. So strike price is 420 and stock price is 416. These have 116,000 volume with 9K open interest. So the volume is realistically the most important here. And then you can see the bid and ask spread is just $1 away. So, I mean, these are really cheap. It's 0.01 versus 0.02 is ask. But you can see like bid ask spread on these aren't too bad. Actually, when you go up higher, it's pretty fucking bad. But either way, there's enough volume here. You're not going to run into any issues. And then if we go to Mara, you can see that the volume on these is like 12K. So, you know, there's a decent amount of volume. Just make sure there's some fucking volume, please. Like, there shouldn't be no volume on the contract. So there shouldn't be like 100 volume. More than like 1,000 or something like that. Make sure there's some volume on the contracts. That's basically all I got to say. The larger caps, they're going to have volume on the contracts. Like NVIDIA, Apple, Tesla, AMD. You know, it should be pretty obvious. If the stock has a lot of traded volume, like shares-wise, it should have a lot of volume in the options chain. But yeah, so here, right, we didn't have a price target for NVIDIA. This was up a shit ton. This made this big move up. And we're looking for it to make another move up, right? What do we do? So this was, what day was this? 7/12. 7/12. What day is 7/12? Who knows? July 12th. That is a Wednesday. So we have Wednesday, Thursday, Friday. The first 3 to 5 days of the breakout are going to be the strongest. So because this broke out on Wednesday, I actually took them here, but let's just go with the breakout. Because we took this on Wednesday, because it broke out on Wednesday, our contracts are going to expire on Friday. That gives us a perfect window for the first 3 days of the breakout, which, as you can see, those were the strongest. The first 3 to 5 days are going to be the strongest. In this case, the first 3, that set the high for NVIDIA. I'm pretty sure that was literally all-time highs. Okay, never mind, idiot. Either way, you get the point. The first 3 to 5 days are going to be the strongest. So the first 3 days are what we traded. And looking at this, you can see this made a 12% move, basically, from open to high. So how do I know that this is going to make a 12% move? Why would I select my strike to be 12% higher than breakout price or like opening price, you know? Because if we were to look at the average daily range, it's 3.45. I think at the time it was closer to 4. It is slowing down. In the next 3 days, if I expect like the next 3 to 5 days for this to be a breakout and my options expire on Friday, I'm buying them on Wednesday, I know that I have 3 days until these contracts expire. So I'm going to take the average daily range and multiply it by 3. It's that simple. So all I did was take the average daily range, which was about 4 at the time, multiply that by 3. That gives me 12%. You can end up getting calls way up here, 480 calls, which are going to be basically like a penny, and you can load the fuck up on those and make a shit ton of money. I don't know what call. I think we went with 460 or something like that. which people are like, oh, it's not gonna hit 460. Let me see really quick which ones we actually went with, because they were just so cheap. It was like I didn't want to go too much further out. I was like, I'd rather just let them be in the money, rather than not. Let's see, Nvidia. Oh, so we went with 460 calls. Let's see. Can you guys see this? I guess it's inverse for some reason. What the fuck? Anyways, 8,455% off a 12% move. Insane, right? So that's an 85 to 1 trade. Yeah, so that's basically what you do. So we went with 460s. Like I said, the reason we went with 460s is because it was Wednesday. Options expired on Friday. If you're buying contracts, I bought them this day. So if you're buying them this day and you say, hey, I think this is going to go up 460, I think this is going to go up 8% by Friday, they're going to look at you sideways and be like, sure, bro, take the contracts for cheap. Me, I'm like, yeah, I'll take them. They don't know. I'm catching this breakout. But, if you're buying them on this day, they're going to be worth a little bit more already. I think they opened up like 200% higher or something like that. But I did end up adding more on this breakout as soon as the 5-minute opening range highs were taken out. And so that is realistically when you should take profits. If this is up like ADR, so if this is up, ADR was 4. If it's up 12% in 3 days, that's like maxed out on ADR. Take your profit there if you don't have a price target. If you have a price target, wait for the first price target, sell half, and then keep the rest, see how it acts, and then sell the rest. But I'll show you an example on that. Where were we? So, yeah, I mean, basically just multiply the ADR by how many days left you have on this contract or how many days until expiration. Trade the breakout that way. Typically, your expiration should be within a 3 to 5 day window. So if the stock's breaking on a Monday, you obviously are going to buy the calls for Friday because that's when they expire. You're not going to, this isn't SPY. You can't get 0 DTEs on a Tuesday or something like that. But basically, that's how it works. If it's breaking out on like Thursday or Friday, it might be a little bit more difficult. Friday, you could play a single day move like Carvana, where we played the single day move on this one. Now, what day was that actually? That was 9/14. 9/14 was a Thursday, so it wasn't bad, but it hit our price target, or just about. Oh, Jesus. So, if we go back and we look at the 3,700% trade, or no, let's go to Mara first. So, if we look at Mara, right, it's the same setup. It's really simple. Setup here was big move up. This made a 68% move up. Price went sideways. As it went sideways, this volume is dying out. It's very clear here on Mara that the volume was dying out. And then it broke out, and I bought it this day. Bitcoin also had a setup, so that was really important for Mara because Mara follows Bitcoin pretty closely. So that was really important. That just comes down to the context of the market, and you'll understand that as you start to trade this more and like start to join my lives, watch more of my videos, whatever. Or if you're in the Discord, I mean, you can just follow what I do. But anyways, you'll understand the context of the market, and you'll understand how to do that as time goes on, as you get more used to this. But for the basics, like if you're buying the breakout here, Mara has an 8.6% average daily range. So if you expect 3 to 5 days that you're going to hold this, let's say 1, 2, 3, 4, 5. 5 ended up being a really high day, and you're buying it right here, you have this made a 40% move. So what's 40 divided by 5? 40 divided by 5 equals 8. What do you know? Perfectly the ADR. So multiply the ADR by how many days you have left on the contract. And if you're buying contracts, like let's say this is Friday, let's say, which I don't think it is, but let's just say this is Friday and you have until next week. Then you have so many days. Just calculate the first 5 days. Expect 3 to 5 days in. Multiply the ADR. Pick one of those. You can pick 3 days. You can pick 4 days. You can pick 5 days. But if you're going to pick 3 days, then multiply the ADR by 3. If you're going to pick 4, multiply it by 4, right? And, you get my point. So that would be how I pick my strikes when I don't have price targets. And then expiration date is just going to be, within a week or two. But here we can clearly see that there's a price target. And I spotted it again. So it's right there. The reason why I choose... Can you guys see this? Oh, shit. Alright. Okay, so the reason why I choose this price target right here is because this comes up. Look, there's a setup right there. Volume dies out, breaks out, high volume. What do you know? Makes a big move up. Anyways, there's another setup right there. So you can see that the price, when it made this move up, it came down, struggled, came down, struggled, came down, struggled. Over and over and over. It bounced along this line multiple times. You can see that there's multiple touches along this line. It's very obvious. And then this is really close to the camera. But going into this, you can see it had the same problem at this price level. Bounced along this 5, 6, 7 times, whatever. Came up, came back down. I don't know what that gap is, but then came down again. Bounced up a little bit, couldn't get above there, came back down, bounced up, couldn't get above there, broke through, came down, had more touches here, and then it was just like pretty obvious right there. And then if we look back, you can see that there's some chop back here as well. Yeah, I mean, this is another price target area right here. We have this white line, which, as you can see on this breakout, it ended up hitting that. So if we take this, you can see this really tight consolidation here. And then we identified that price target because of the multiple touches here, blah, 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 blah. You get the point. It breaks out. It takes super long, so you would have been in shares, not contracts. I did trade contracts on this to this strike again, though, which I'll show you guys in a second. But yeah, I get my price target. So if you have a price target that you can identify, then set your strike at that price target. And if your price target is more than 5 times the average daily range away, and your contracts expire soon, like it's not going to hit it by that time. So don't expect that it's just going to fit your time frame. Like if this is Wednesday, if this is breaking out on Wednesday, and you have a price target that's 5 times the ADR away, don't expect that it's just going to make that big move in 3 days just because that's when breakouts are strong. You still have to give it like 5 days. If ADR is, or if your price target is 5 times the ADR away, then select a contract that's going to be 5 days out. If not, what you're going to run into is like you're going to make a little bit of money. It's going to go up, but then you're going to get fucked because it doesn't get near your strike. And when your contracts are too far away from your strike and too close to expiration, they just go pretty much worthless. You're going to fuck yourself over doing that. But then this one, you can see again, I believe 6:20. I don't know if that was a Friday or not. I'm not a calendar genius. But anyways, if this was Friday and you take the breakout, that would have been pretty lucky because that's 2 times the ADR. Let's see, 6:20. I really don't remember. I did take this, though. I remember that. You'd get really lucky if you ended up taking this and that moved in that day because you really shouldn't expect it to go much above ADR that quick. But yeah, I mean, just set your strike price at your price target and make it make sense. Don't expect it to make a huge move in 1 day. Don't expect it to make a huge move in 2 days. Give it some time. Like, be logical with it. And if you can't be logical with it, well, then that sucks. You're going to lose money. Yeah, I mean, I post literally all my trades on my Twitter, pretty much every single one. So if you're going to, if you have problems with it, just watch what I do and get the hang of it. But that should make sense. If it doesn't, I don't really know. Let's go over to Carvana because that would just be better. Okay, so Carvana, where was this day? This day is right here. So when you have contracts that expire quick and you don't know how long this run is going to last, you can zoom in on time frames. So let's take a look here. Now Carvana, if we were to mark out a price target right here, because this came down, touched there perfectly, came down, kind of touched there a little bit, came down, touched there again, struggled here, and then struggled getting back above it. So that was a clear price target right there. And this hit it pretty much to the penny. But this from breakout was a 170% move. So that happened in 6 days, which is like, okay, what the fuck? That's insane because Carvana has a 8% ADR. I think at the time it had more like a 13 or 14% ADR, but that's still insane. So what I did with this one was I bought the breakout here with options. My strike was just like pretty far out. Like I just chose. I didn't go off like ADR like that. I mean, you could have. Let's say this was like a 45% move. You could just multiply the ADR by 3. Expect to hold this for 3 to 5 days. If it continues to go, then it continues to go. But Here, I ended up taking some profits, and then, or it was on this day, I guess. And then if we look at the hourly chart, you get the same setup. So this goes up, sideways. As it goes sideways, this volume dies out here, and then it breaks out on the hourly right there, and the volume comes right back in. So this was the 3,700%, because now we had a clear price target, and we knew that this was already on the move. Now we have our clear price target. Boom. We select our, what is that, 19 strike? Let's see, Carvana. Carvana, 3,700%. Where is it? Oh, I got 17s. Even better. What do you know? So I had 17s. They went in the money. This is flipped, obviously. We figured that out earlier. But you can see. So for that, it's kind of like the same thing as NVIDIA. If they're too far out of the money, because you'll see on the options chain, like if they're $1 each, like the ones below that are still going to be $1. You might as well just buy the ones above that. Or if they're really cheap, like $3, and the ones below that are still $3, it's like, bro, just get the ones above it. Or if it's not that much of a difference, you might as well be closer to the money rather than further away, because it'll just help you out. But yeah, that's like, you can hit your price target super easily. These stocks will make big moves very fast, especially when they have relatively low market caps and high ADRs. So don't be shy. Don't think that it's not going to happen. And then when it comes to your entry, so your entry is going to be the same as entering the breakout with shares. You know, first 5 minute, you wait for that, and then you enter on the highs, stop loss at low a day. But with options, you don't calculate your position size like that. You just put 1% of your account into the options, because if this gaps down on you tomorrow, like let's say you take breakout, it gaps down tomorrow, they're fucking worthless. You're toast. You can't even sell them. So you might as well just put 1% of your account in, because if it gaps down, or if it's hit, even if it hits stop, like most of the time they're going to be pretty worthless, because we're playing pretty close expiration dates and pretty far out of the money. Just put 1% of your account in, or less if you can afford to. A lot of the times I've been trading with like 0.5% lately, or even less, like 0.25%. But 1%, just keep it to that max. When it comes around and the market's good, like it used to be, we can go with that 2%. But you got to be careful. You really, really got to be careful, and you have to know what you're doing. Okay, what's next? What else do we have? So you guys understand what just happened. You guys understand risk that. Price targets, right? You guys understand how to find these price targets. You just look back in the chart. Where did it struggle? Where did it have support, resistance? And then picking your expiration date. It's like, that 3 to 5 days out. Just multiply the ADR. Pretty simple. And then, yeah, expiration date's going to be 3 to 5 days out. Strike price is going to be at your price target. If not, multiply it by the ADR. And I don't think you can get much more simple than that. It's going to take some time to get used to, and it's going to be like a lot of discretion. Over time, you'll figure it out. Like, if you don't figure it out, you probably shouldn't be trading, because you must have a really, really low IQ. It took me, I'd say, like a year or two to figure it out. So I just gave you all the info that took me a year or two. I gave you this whole layout. I gave you this whole strategy. I'm giving you everything. I'm saving you guys a lot of time here. So if it doesn't work tomorrow or the next time you try it, who cares, bro? It took me years. So even with the right information, it's going to take you time to learn, because you're going to have to go through it, and nothing is going to teach you better than experience. No matter what I teach you guys, it's like, it really won't matter until you go and try to do it. All right? Then you'll figure it out a lot quicker. But then you'll have that resource to come back to and be like, all right, here's where I'm fucking up. Let me go watch that video again. All that stuff. But yeah, how long has this been? 18 minutes. Jesus. Yapping. What is next? All right. Part 4 or chapter 4, whatever. Scanning for setups, market conditions, sector rotation, and setup selection. Bad setups can be good if in the right sector. I'll show you guys all about that, because the context of the market plays a really, really big role in how you're going to be trading. Also, like when to trade versus when not to trade. So yeah, I'll see you in chapter 4. What is up, you guys? A little bit of delay here. I waited a couple days to do this part 4, right? Chapter 4, whatever you want to call it. Let's see. Chapter 4 is going to be scanning for setups, market conditions, sector rotation, and setup selection. Bad setups can be good if they are in the right sector. Okay, that's pretty important. That's like extremely important. So you guys are gonna have to pay a lot of attention to this. If you don't, then everything that you watch chapter 1 through 3 is not really gonna be as effective. So scanning for setups, you know the setup that you want to look for. So let's go for that. You're gonna have, when you open my layout, you're gonna have 1 month gainer, 3 month gainer, 6 month gainer, scan. Those are the three that you really need to use. The other ones you can just ignore them for now until I get the other parts out, or not the other parts out, but like a whole new, fuck was that? Whole new series started. All right. So if you're scanning for a setup, you go through, like, let's say you start on the 1 month gainer. You click through here. What you're looking for is a stock that has recently made a big move up and is now going sideways, right? So this would be, you know, you're just looking for the setup, like part 1, where you guys understand how to identify the setup. Like, you're not going to want to look at this. Like, there's nothing really to see here. 1, it's a biotech. 2, it's just a gapped up, went straight up. So look for the setup, like in part 1. UEC, you can see we just found. This is starting to set up. So what I do is I'd flag it, goes to my watch list, which it's already on here. Starting to go sideways, volume's starting to die out a little bit. Recently just made a 100 something percent, 115% move in the past like 4 months. And then if we look at SPY in the past, 4 months, or whatever you want to call it, it's just been kind of shit. So you can see recently the market's been kind of shit, but UEC hasn't. It's been strong. It's been doing the complete opposite. So this would be very strong. And now you'll see, well, before, okay, this is another one. Basic materials. You'll see UEC is also basic materials. What else was basic materials? I think there was another one. Huh, maybe not. If we went through 3 month gainer, wow, these scans are looking thin. Market's been pretty booty cheeks lately. Let's see. So, basic materials, where is it? There's got to be one. Okay, this is LEU, basic materials. So, similar sector. Right, or not similar, same exact sector. Don't know what I'm saying. So, same exact sector. You can see UEC and LEC. Like, these are recent, or LEU. So, LEU has recently been going straight up, right? While the market's been kind of junk. Like, in the last few days, SPY broke down. What's this doing? It's going straight up. So, it's totally going opposite of the market. What was the other one? UEC. Same thing here. I mean, when SPY broke down, this is holding up. It's going sideways versus SPY going straight down like 4%. So if we're like, okay, we can identify through this scan, right, that that sector is like relatively decent. So right when you see like a few stocks in the same sector or same industry going straight up, then you have to take a look at the sector. So I'm gonna link this industry layout, so it'll come down on here. Can you see that in the bottom here? Kind of. You just go to this industry tab. It's gonna be a whole nother layout, and this will help you individually go through the sectors. So we know, what was it? Basic materials, right? If we look at basic materials, the sector itself may not look all that good, but it was uranium, the uranium stocks. Let me double check on that one. I know it was uranium, but basic materials, industrial metals, and minerals. So if we go to basic materials, industrial metals, and minerals, we can see that this has been going sideways for quite a while. It's got this monthly flag, so it made this big move up, 178%. It's going sideways. We're basically getting a setup on the whole sector. And if we go through this individually, let's go through with a scan. You'll see UVORI, UEC, URG, LEU, UUUU, whatever the fuck, CCJ. Recently, so all these uranium names are going straight up. That would be a basket of stocks that I'm then going to focus on. So I find, which ones are leading, and then I'm like, okay, well, those are in this sector. Those are in this industry. Maybe it's not the same industry. Maybe it's just the same sector. But I'm like, okay, let's take a look at these, and then I'll look in further and figure out which one's the leader. So how do I know which one's the leader? Well, which one is up the most? It's really that simple. So this one, CCJ is up 74%, 75% in the last 6 months. UEC is up 117, 115% in the last 4 months. So this one, is already above CCJ. Why is that? Well, CCJ has a 3.11 ADR. UEC has a 5.72. UROY, if we look at this, it's got a higher ADR than UEC, but UEC has recently made a bigger move. So UEC, out of the uranium names, is going to be my focus. And you can see that it's setting up. So although the market conditions right now aren't the best, I will probably trade UEC just because I like how it's been going straight up, completely, opposite of the market. It's like, for some reason, it doesn't care. Don't know why, but I don't care. I don't care why it's going up. I don't care why the market's going down. I literally do not care. I just look for the setup and I trade the setup, and that's it. So this one, we'll have to give this a few days probably. I would like the 20 to catch up and let this go sideways a little longer. Could it go tomorrow? Could it go soon? Yeah, but I would like for this to set up a little longer. Only reason is because the weekly, you can see like 19% extended from the 10-day here. I'd like that to catch up a little, or the 10-week SMA, and then I'd like that to catch up a little. But another thing is, if we look at like a theme or something, so these are the ones that were coming up recently. So CGC, ACB, and then we have the whole like sector for, or ETF for it, MSOS, Tilray. So these are like weed stocks, right? Healthcare, drug manufacturers, CGC, ACB. So these recently made a big move up, right? ACB made a 154%. CGC made a 383%. Tilray made a 123%. So CGC is the one that made the biggest move up. If these were to set up, which is still possible, you can see it's holding this 20. It's building higher lows. Doesn't really want to go much lower from here. Could this set up in the future? Maybe. So I'll keep my eyes on it. But I'm not going to sit there and look at ACB when I know CGC is leading the weed stocks. Why would I waste my time? I could look at it and, like, whichever one breaks out first, I can go for that. But I'd rather take the one that has made the bigger move up and has had more volume. I don't know if it's actually had more volume. Maybe more dollar volume. But I'm just going to look at the one that's made the bigger move up. That's basically it. Or the one with the best setup. As long as it's relatively a leader, you're good. So you need to find that little like group of stocks, or that basket of stocks, that sector that's performing extremely well. Like I was saying, right now it's a little hard to show that for you. Recently we had energy, right? So if you were to simply just go through these, you'll see like you're not going to look at this and be like, wow, this is a great sector. Like, this looks fucking horrible. Tech, it's going straight down too. Going straight down. Real estate, industrial, straight down. Healthcare, going straight down. Finance, straight down. Energy, what do you know? It's been going up. Not the most, but it has. Consumer defensive, not really all that good. Basic materials, like, really isn't all that good either, but we did see that basket of stocks uranium, so that would be kind of like a theme, I guess, or like a subcategory. It's not really the whole sector, but uranium is obviously performing well. We can see that just in, what was it? Just in UEC, CCJ, UU. Like, if we look at all those, you can tell that, uranium is doing good. It's really not that difficult. But energy, you can tell just by looking at the sector. And what do you know? The breakout setup was on the weekly chart. Big move up, sideways, builds these higher lows. If we were to make some little lines here, briefly, I'm going to make it perfect. You can see it broke out right here, and now it's been going up. And there has been a lot of stocks in here. So PFIE, I would consider the leader of the energy sector. It's way thinner than the majority of the names, but it's doing well. You can see that this made a 157% move. None of the other ones really made a move like that. This one's made a pretty good move, 87%. So this one would be another candidate. Pretty low volume too, like pretty thin. HPK, hasn't really made that much of a move. VIST, this thing's been going straight up. Don't know what's up with that, but it's just not stopping. Had a little setup right here. Nothing crazy, but today it broke out. It's been doing pretty well. TW. You know, a lot of these stocks in this sector are just been going straight up. You can see TTI is setting up here. This one I'm actually a pretty big fan of. It's made a 144% move. PFIE made a 163% move, but it's way thinner. TTI has, you know, like 6 times the market cap. ADR is much lower, but it is setting up a lot better. It's already looking pretty good. Energy's looking solid right now. The only thing is just overall market isn't that strong. We have things like this, NGS, where it looks like it's just going straight up. Although it looks like it's going straight up, it's only made, you know, a 50% move. So you really got to look at that. You really got to check how big the move is. But yeah, once you can go through the scan and you see like a basket of stocks, a group of stocks, a sector, whatever it is, leading, then you go from there and you figure out which one is leading that sector. How do you figure that out? Or, you know, group, whatever. How do you figure that out? Well, which one's up the most? Can it get much easier than that? Pretty simple, right? And then we can see that PFIE for energy was technically up the most, and energy would be a leading sector right now. Yeah, it's technically up the most, but what's setting up better? TTI with very similar stats. Straight fucking up. It does not want to go lower. Set up right here. Broke out. Made a 20% move in 13 days. So 4% ADR. 20% in 13 days is not a lot. But like if you look at the market, this didn't make a 20% move, I'll tell you that much. From bottom to top here, there's a 4% move. And, you know, TTI is going 20%, so you're outperforming that way. Pretty easy, right? Let's see, what else? So identify leading sector or group or whatever. Then identify the leader. And go from there. Market conditions. Market conditions. So we'll look at SPY for this. You can also look at CompQX. If you want to, your CompQX isn't going to update like real time unless you pay for it. So we'll just look at SPY. You know, they're pretty freaking similar. So SPY, when do you stop trading breakouts? Well, you'll notice around this period that breakouts started to kind of suck. And, you know, I was losing breakout left and right. And I'm like, okay, what the fuck? A little weird. Right after, market starts to come down. So right when the 10 goes below the 20 on the daily chart on SPY, you should stop trading breakouts unless, like, you know, you're pretty experienced. There will be times, like, I would say UEC is probably a decent setup to take, TTI, but reduce your risk. So if we go to SPY and we see that the 10 is below the 20 once again, 20 is even below 50. 10 and 20 are below the 50, so it's really not looking all that good. But let's just say we were right here and 10 was below the 20. I'd probably cut my risk from 1% to like 0.5%. Let's say you're risking 2%. Bring it down to 1% on really good setups. Like, just don't take anything if you don't know what a really good setup is. And, you know, a really good setup means a really good setup in a really good sector, and it's a leading stock. So if you can't identify that, just don't do anything, because it's already hard enough to trade in this period and actually catch all the leaders and do really good. When this happens, just don't trade. Like, if you suck, just don't trade, because you're going to suck a lot more. If you know, like I was saying, if you're good and you can identify everything, then during this, cut your risk in half. During this, cut your risk in half again, so go with like 0.25%. Like, if UEC and TTI, those go, like, I'll probably do a 0.25% risk, and I'm not going to I'm not going to have multiple positions in the same sector, so I'm not going to have, like, TTI and PFIE. It's like they're both energy. I'm not going to take both of them. I'm going to take one or the other. So right now, I'm leaning more towards TTI. Before, I was leaning towards PFIE because TTI was just kind of going straight up, didn't really set up. But now that's what's happening with PFIE. And then for uranium, I'll go with UEC, just UEC, not UEC and UUU, not UEC and all this other stuff like UROI. I'm going to choose one and I'm going to stick to one. So that's it. And I've already chosen that UEC because it's setting up first, made the biggest move. And that's pretty much about it. So I'll risk, you know, 0.25%. You can see here on the risk calculator, it's telling me 26K or whatever. So I'll take that number and I'll reduce it. Or, well, this isn't even my risk, but, you know, I'll calculate it when the day comes that, you know, might be tradable. So SPY, when the 10's below 20, don't trade unless you're really fucking good. So most of you guys should not be trading when the 10 is below 20. Typically, I don't even trade when the 10 is below 20. When the 10 and 20 are below 50, like, you probably shouldn't trade at all. Like I said, just cut your risk in half again if you know what you're doing. Even then, I'll probably end up getting burnt on these or not getting much follow through, but it's like, it is what it is, I guess. Yeah, what else? What else can I go over? Oh yeah, bad setups can be good if they're in the right sector. So when you look at the perfect setup, let's use NVIDIA for an example. If you look at the perfect looking setup, the reason this was such a perfect setup is because it was a really good looking setup in a really good sector, and it was a really good stock in that sector. But if you're looking at like PFIE, let's say, the setup might not be all that good looking. Like, there is some sort of a setup here. This could end up going, relatively soon. It makes it a much better setup because the sector that it's in, and because it's made a big move, and because it's a leader in a leading sector, if that makes sense. Like, you're not going to find super beautiful looking setups all the time. You're not going to find the NVIDIA all the time. That's rare. Mara at the time, I mean, this was a pretty decent looking setup. It was a really long consolidation. That was 2 months. But this setup before was pretty fucking ugly, but it did make, a 40% move in a few days because it was in the right place at the right time, realistically, is what it comes down to. Carvana here was like, a leader of the market for a while, made a 100% move in 2 weeks. Setup there that's not, typically what I would want to see, but because it's a leader in a leading sector, right? That's it. That's literally all it comes down to. So the context is going to be more important than the setup itself. And you'll find that in the beginning, you might be looking for just perfect setups and you won't be focusing on the context. But I'm telling you, the more you focus on the context, the more money you're going to make. Because that's really what it boils down to. It's like, you have to be focused on the leaders in the leading sector. And that's about it. That will come with market experience, and that will not be like, you might watch this video and still be like, what the fuck? Because you're going to have to go through these scans. Your scans are going to come up with the same stocks that we came up with today. 3 to 6 months from now, things are going to be way different. Next week, it's probably going to be different. So that's why the Discord makes sense to be in, I guess you could say. Helps people out, figuring that part out. But over time, the more you do this, over the next 6 months, you're going to figure it out. If you can't, then you're pretty stupid. So yeah, I think, let's see. So I guess recap of this video. How long has this been? How do I end up yapping for 20 minutes like that? All right, so recap of this video is going to be focus on the sectors. So make sure that you go through the scans. You come up with a leading sector. Sometimes there's not going to be like a definite leader like that, or maybe there'll be multiple. You might see that tech and energy are performing well. You might see that basic materials and energy are performing well. Like right now we have, the oil and gas stocks and uranium and some weed stocks. I mean, the weed stocks are kind of dying out, right? A little bit. Might not be too bad, but you know what I'm saying? Like, let's say we have like the weed stocks right now, which would be a theme, because it's not a sector. There's no sector called weed stocks. Uranium, which is like kind of a theme, I guess you could say, but it's like an industry in a sector. Let's just call it a theme. So we have uranium, weed stocks, and then for sector we have energy. I mean, look at the gas prices; they're going straight up. So why aren't the stocks going straight up? Well, surprise, they are. You can look at CVX; it just broke out today. Like, yeah, this is a low ADR, but this is something that was good for options. So this broke out today. This little range here, got my price targets set. And the reason, that I took this is because, actually in the morning I didn't take it, but I'm glad I didn't because it would have stopped you out. The reason that I took this is because, it was a good sector. Yeah, it's a pretty big market cap, very low ADR. And in the first 5 minutes, you would have been stopped out because you would have entered right here. And then 5-minute highs, now we came up here. But, you would have entered right here. Next candle would have stopped you out at low a day. Your re-entry would have been right here. Which you after getting stopped out that quick, you might be a little scared to re-enter. So I waited for this, and I was like, whatever. I just let it go. And then when it came down here, I did end up buying it because I was like, it's pretty close to re-entry. I bought it like around here, and then right after that, it went up 0.5%, whatever, 0.6%. We'll see where it goes tomorrow. I didn't put much at all, like 0.25% risk, but pretty solid. Yeah, so you can see the context of the setup is, fucking more important than anything else. Like, this is a pretty shitty looking setup. This only went up 5%. It went sideways right away for almost a month. But it's got this really strong breakout day where it's moved like, let's see, it's moved like 1.5%, so about ADR. And it's been doing pretty decent. So why is the success rate on this increase? Well, because the context of it, it's in a good sector and it's a large cap in the sector. Like, it's a pretty strong stock, based on everything that's going on and just based on how it's been performing. You can see it broke out right here this day. That would have been ideal to get into. But yeah, I can't really get much easier than that. I think that honestly wraps it up. Like, what else could I really say? All right, guys. I'll see you in the next video. I guess that's going to be it for this breakout Bible thing. I think what I'll do is I will make a new video. I'll like combine all the videos. I'm going to have to figure out how to do that. I'm going to combine all the videos and then I'll make it into like one full video. And then you guys can watch that if you really want to. I don't know. Because what I did, I used to just throw shit up on my TV and watch it over and over and over. If you guys want to do that, then do it. Because I'll just end up doing that anyway. Added another 4 minutes to the yapping session. Sick. Yeah, I'm going to end the video here. All right, bye.